Hey traders, Nick here, re-recording WYNN Resorts because I did it and for some reason the audio didn't come out, so I'm doing it again. Alright, so WYNN Resorts, the name in the headlines obviously. We've all heard now, Steve Wynn was accused of doing something pretty bad and the stock got punished hard. And if you did your homework, you made money on the trade. So I did my homework and I reacted and I sold puts in the stock on the big dip and added to it, and they're all profitable by now, and I trimmed some, left some open, and let's discuss that. So how do I trade WYNN from here on out? So first I look at the fundamentals. Okay, so WYNN Resorts, it's a momentum stock. A while back Steve Wynn said, I'm buying my own shares out in the open market, and the market loved it. So it's not very cheap, it's 40 some PE, but it's not bloated either, so it is worthwhile. Gambling. Okay, so recently in the you hear buzzwords like global synchronized global recovery or synchronized global growth. That hasn't happened in X years. This is them talking, the talking heads. And then you hear wage inflation. So what do people do when they have money? They spend it, and people love to gamble. They're going to gamble a lot. So they're going to benefit. Steve Wynn's company is going to benefit. So his name is on the doors, on the buildings, on the company. So whatever happens to him should impact the stock, but not to where it's going to zero, people. This is an earnings report. They said, look at what we're doing. Everybody's excited. And then one day, suddenly, you think all that excitement is going to go away because one guy did bad things. Guess what? The company will survive. This is not Tesla. Elon's effect on Tesla will be detrimental completely because the money comes into Tesla because of Elon. The money comes into WYNN because people like to gamble. Period. End of story. Tesla will go out of business if Elon can't bring in the money. Steve Wynn's company, WYNN Resorts, will continue to do business. I mean, this is a proven winner. So, having said that, the fundamentals are still okay in my book. What he did was not okay, but I can't imagine that Vegas or wherever, Macau or what is it, Boston, they want to lose billions of dollars or hundreds of millions of dollars and put people out of work just because they want to rescind. Oh, we're reviewing the license. Really? Are you kidding me? You're going to put people out of work because of one guy, including the women that work for him? So it doesn't make sense. You're punishing the victims. You're not just punishing him. Punish him personally, and that's probably what they will end up doing, civilly, criminally, whatever. But they're not going to rescind they'll put him under probation, quote unquote. So regardless. So technically, fundamentally, we've moved on. Technically, what's going on here? This is a level of contention. Whenever I look at the price now, I look to the left and see what happened before it and how we got here. Level of contention was resistance, and then boom, broke out. Support for a huge breakout. Support under huge pressure. Look at these volumes. This is a lot of pressure. Bounced hard. Came back down to it on big volumes and now settling higher lows. That's good constructive pricing. While it is constructive, it also presents risk. Why? Because if it fails, it looks like the bulls would be tired because the bears have set lower highs on a longer time frame. They bounced on the level, tested it, broke the floorboard, they go into the basement. This is where I look left again to see where they're likely to stop. Looks like there's a consolidation period right here that served as similar to this, but on a lower level, 20 bucks lower. You see, roof, breakout, support, and took off, right? So if this fails, this will be the next battle zone. And if this fails, this will be the next battle zone for exactly the same reason. I'm looking left. Okay, so this red-blue here, this is daily, right? This red-blue is just a mere regression line for a year. So reversion to the mean would bring it back to here. So if I wanted to buy the shares, that would be me playing, saying, okay, the market in general is going to stabilize already, and WYNN is going to just continue to creep back up, eating away into this crime scene here. I don't expect this to come back anytime soon, fast, but I do expect to crawl higher. So I could risk my money by buying, spending $165 a share right here, right now, but that leaves me with no room to spare, meaning I start losing immediately. Okay, I have an asset on my hand, but it's a risky asset at that because of the headline. So I could buy a debit call spread, which would put me along the stock I could buy at calls, which would put me long the stock for a fraction of what it would cost to buy the shares, right? However, VIX is elevated in general, therefore I'm overpaying. So in this environment, I'd rather do a spread because then I'm buying and selling. So this elevated risk gets neutralized. So I would buy a debit call spread. I wouldn't do it for next week or 2 or 3. I'd go out to April or longer because that just gives me time on the clock. If fundamentally this stock is going to recover, then I double my money over time. That's how I can do it. I risk a little bit for a big bang. If I buy the shares, I'm not going to double my money. Okay, but percentage-wise, it's a bigger bang for the buck if I do it through options. Okay, so that's one way of doing it. Or I can be bearish about it and buy a debit put spread. Okay, or protect my shares. If I'm long the shares, I buy in some puts. But again, buying puts at elevated VIX is an expensive proposition. So how can I go along it? My favorite method of going along when I know my fundamentals is by selling puts. I told you I already profited on the way down. I shared ideas. Is I sold puts into this madness. I sold them at 130. I sold them at 145. I trimmed a lot. So if I sold it and collected $7, it became $10, $9.50 or something like that. I lost money on paper, but I really didn't lose any money until it falls through my level. So here's how it works. Let's pick 130. If I collected $7 or $8 to sell the 130 put out in time, like the end of the year, then or even next year, January, it leaps. So then what I did is I collected money now, a lot of money now, to say, okay, between now and then, if the shares fall through 130, I'm on the hook to buy them at 130. So somebody out there said, you know what, I think it's going to 125 and I'm going to buy a lottery ticket. I want to buy it at 130. I heard this, I look at the chart and I say, you know what, I'll take that risk. That sounds like good risk for me. Here, give me your money. So they gave me $8 a contract or $10 a contract, whatever it was. I give them a lottery ticket. So if time passes and WYNN stays above, almost said Steve, WYNN stays above, whoa, Freudian slip, right? WYNN stays above my price, then their lottery ticket is trash. I won. I keep the premium. So if I did 10 contracts, that's $7,000 out of nowhere. But I have to be able and willing to buy the shares at 130. So 10 contracts, that's 10. Each one is 100 shares. So do the math. That's a lot of shares. I better be able to buy it, because if I'm not, they will let me sell the puts to a degree. But when time comes and I get assigned the shares, they'll say, whoa, you don't have enough money. Your account is locked. You better do something about it. Or they'll exercise some stuff on my behalf and it just becomes messy. So in that case, I will do a credit put spread. Now this is not an exact trade alert. These are my trades that I did along the way. So do your homework or reach out for details. I'm just sharing how I do my entries. So I do my homework, I look at valuation, I look at levels, and I take the risk. So I did take a few at 165, so those got a little hairy. I did manage out of them for a profit, but it took a lot of short-term management. But these at 130 and 145 were easy money because I did them way out in time, so I didn't sweat the tick by tick by tick. Okay, so I would definitely not go naked through an earnings report. I would go. I would protect myself through the earnings report. And how I do that is, if it's at 130 that I'm committed to in January and I collected dollars for it, I would spend a few pennies to protect myself through a crash for the next couple of months. So if we go to zero, then I still made money. Now, it's temporary protection, but it still works. All right, so this is WYNN on one time frame. This is WYNN on multiple time frames. This is the daily we were looking at. This is the weekly, just to show you where the all-time high was, where the recent low was, and look where we are. So if markets overshoot high and low, not good, not good. Somewhere in the middle lies the truth. Look where we are, somewhere in the middle. This is where we are right now, these white circles. They've been there before, boom. They've been there before, boom. Look where they went, look where they came back. Now we're right there in the middle. That's why I said 130 seems like a decent proposition for me, because look, if I should have extended this. If I extend this all the way back to here, it's pivotal zone, right? Yep. So I'm okay taking risk in the middle. So do your homework, choose your risk level, gather your thoughts and trade accordingly. If you have any questions, you can email me at sellspreads@gmail.com.